Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, March the 15th, 2013. I'm recording this video on Sunday the 17th, March the 17th, and just a quick reminder for those that haven't signed up for the upcoming seminar with that we're hosting next Saturday, March the 23rd with Don Valu. It's going to be focused on taking a systematic approach to seasonality fundamentals and technical analysis. So it's Don's kind of going to be showing the group, his systematic approach and the type of methodology that he uses and that he helped develop with his partners, and that he uses to run to help people with their investments, on the various venues that he talks in, on BNN and in the Financial Post, the Globe and Mail, and some of the other venues that he's in, available and involved in on his websites. We have links to his websites. He offers a lot of fantastic free information. Every single day they provide an update, and his information is what I would consider, high-level newsletter information, and he offers it for free, every single day. So if you want to learn more about his methodology, then I'd really suggest signing up for our seminar this weekend. It's going to be an in-depth educational session where, from 9 to 1 o'clock in the afternoon, where he's going to show you in depth how he approaches the market. So if you're interested, just go to, www.markettradingconcepts, all one word, .com. That'll take you over to our main page, and you can link to this from the main page, and so you can link to this from the main page, or you can come over to educational specials on the upcoming events, or the events calendar. Either one will take you there, and then you can register and go through the process by clicking on register for event. So the early bird special ends today at the end of the day, Sunday. So there's a $50 discount for early bird attendance. We're about just over half booked on the event, so you might want to take advantage before the early bird special expires and grab your seat. So with that said, I'd like to move over to and I hope to see you all there, by the way. So let's move right into this week's market recap. So this is I've recreated this chart here because the contract I was trading has expired. So let's start out with the Dow futures. I'm using the continuous contract, which will include the history of the Dow, and will also include the recent data. So the market has really just been pushing to new highs all week long, and for roughly the last 2 weeks has just been pushing to new highs since it broke out of this 13,955 level, and we're starting to get a little bit of sort of sideways action here. Friday was a doji day, an inside day where you didn't really get a lot of range expansion. You just really tested the high and low of the range on an intraday basis. So at this point in time, I'm still just patiently waiting for a decent pullback. We've had a nice run in the market. Here's a couple of interesting reference points. One of the members at the recent CSTA Oakville chapter meeting, we were looking at charts together, and he highlighted this sort of scenario here where you get the measured move. So for example, from this low to this high, the move up, if you project it off of the low, from this low to this high, projected off of this recent pullback level, we've already exceeded this measured move. So from that perspective, and if you look at it from where have we come from, where are we going, we're pretty extended here. We really need to see some sort of a pullback. It doesn't mean that we're going to get it, but where we are in terms of the cycle, in terms of the price action, there's more risk to getting long, let's say at the highs here, in my opinion, there's more risk to the upside from the perspective of, we could just get a pretty quick pullback and get shaken out of the move. I'd like to wait for a quick pullback like this sort of scenario in order to, get on this move, because I believe, the direction is still to the long side. So the risk is that you could get on the move, and at least that's what I'm looking at. The risk is, getting long here and saying, okay, well, it's just going higher, and then you get one of these pullbacks, which is just a pullback to support or a pullback to the breakout point. You get shaken out of the move, and then ultimately it breaks these highs and goes your way. So not to say that we're not going to go higher from here, because, once you start hitting 52-week highs and breaking above 52-week highs, some people use the strategy of, buy the high and expect it to go higher. So that's, they're both valid within, normal risk parameters. For my risk parameters, I personally don't like, buying this high. I don't want to buy this high hoping it's going to go higher and then get caught in a massive pullback, which is just going to be a pullback to logical support. So I hope that makes sense. Not really a lot to cover there. The market's just kind of doing what it's doing. If we look at a couple of other data points here, if we look at this as a cup pattern, again, I've probably covered this before, but when you look at the Fibonacci extensions, let's turn on the 1272, the 1618. We're already above the 1618 of this move. So to me, that's the hard target, and we've already exceeded that. So not really interested, even though I do believe we were going higher ultimately. I'm not really interested at this point in time in in getting long at these levels. I'll wait for a pullback, a nice pullback hopefully. So let's look at the S&P futures. This looks really messy. So let me just get a couple of things off the, we don't need all of this stuff here. Let me just delete this. So the S&P futures, they're very much, in the same situation where, a healthy pullback to, a trend line or, some sort of decent pullback and then looking like we're going to push higher again really would make a lot of sense. So the S&P looks very similar. Let's look at the NASDAQ. NASDAQ is weaker, but it is still, holding above that 618 from this high to this low. So it's net, it's on the bullish side of the tracks, on the bullish side of the fibs. And, everything still looks good. The volume's starting to taper off a little bit, but it all still looks, net bullish. Transports, there's really not a lot to, cover this week in terms of the stock indices. So let's just kind of push through this. So the transports have already kind of moved the width of their box up into this level here, and they're just, they're bullish, they're pushing higher, and they're basically confirming this move. It's a, in my opinion, it's a real move. So let's take a look at the dollar index. This is the market that I believe is driving these markets, in my opinion, the US dollar index. So the US dollar index pushed above its 618. This was a level I was looking at to see if it would get above, and you can see on Friday we got a pullback to logical support, which is essentially, since we had this 8-period moving average cross above the 21-period moving average, and then we really kicked off this move above some of these resistance levels. This is the first real pullback to logical support. So the support level here is let me just grab the pen. So this is a 21 exponential moving average, which is dynamic support. Okay, and that's normally where you want to, in my opinion, want to see the market, trade above in a bullish market. So all we did was really pull back to this, this is actually the 18-period exponential moving average and then the 21-period exponential moving average. So we just pulled back into that, let's call it a 20-period moving average. And that 20-period moving average coincides with right around the level of the 618. So we still need to hold above the 618, in my opinion, and to stay on the bullish side of the of the Fibonacci railroad tracks, if you want to call it that. 8250. We closed just below 8250, but 8246.6. So I'm really looking to see if we can stay above 8250, and we can hold support here, and then we can start pushing off again. And if that happens, then I think that all of the things that a bullish U.S. dollar would imply in terms of correlations, I think are going to be relevant. So if the U.S. dollar stays above this level, then I think we can expect, continued pressure on, things that are inversely correlated to the US dollar, like, things that are priced in US dollars, commodities, precious metals, things of that nature, oil, basically, the precious metals and the commodities. So a couple of warning signs here. You've got everything's net bullish. This is a good sign for, you had the pullback. You would expect it to sort of push off. But, the MACD is getting a little bit toppy here. So this is a little bit of a warning sign here. So, but having said that, if we hold support, we push above it, then I think we need to expect continued strength in the US dollar and continued weakness in all the, inversely correlated asset classes like commodities, metals, and euro. So we'll take a look at the euro and see what it's doing around that key $1.30 level. If the US dollar, let's say, breaks this level decisively, then, we've got to watch this closely. We're right at a key inflection point, a key support level, and we need to see if we're really going to hold that or not. It to me seems like, we kind of pushed above here, we pulled back a little bit, and now we're just pushing back above. And by pushing back above, and this is really only the first test of this moving average. So, I'm expecting from a probability standpoint, I'm expecting that to sort of hold. But, you never really, you can never be too sure in these markets. So that's sort of what I'm expecting. So let's take a look at the euro. Here's the euro futures. And you can see we found support at that $1.30 level. So, we held support, we pushed below it, and then boom, we pushed above it. We pushed right into, we held it, and then we pushed right into logical resistance, which is a 21 exponential, a downtrending 21 exponential moving average on, should actually be red, 21 exponential moving average logical dynamic resistance on, on the euro. So this, downtrending 21 period moving average, all we did was really come up and test it. In order to get back on the bullish side of the euro, I think we would need to see, a couple of closes above the 21 period exponential moving average. But, this is really the key level, $1.30. So if we're going to stay above $1.30, if we're going to push below $1.30, that's really the key there in the euro. And we need to see how that resolves itself with the US dollar. We did see a strange situation with the US dollar holding its support while the euro, was chugging up during this uptrend here. So we could see a strange situation like that happen again, where the euro is just going to hold its level and the dollar index is maybe going to push a little higher. We'll really need to see how the, sorry, I just paused the video there by accident. We'll really need to see how this story unfolds, and just keep a close eye on it. So let's just take a quick look at some commodities. I wanted to look at crude oil. Okay, so crude oil, we were looking at this as a potential support area at the convergence of these two, basically what would have been sort of like the apex of this triangle, if you want to call it that, or the convergence of this downtrend line and this uptrend line. We held support there, and we're pushing, we're pushing higher. I think we're still more, I'm sort of more bullish than bearish on oil, but we really need to get above, these swing points here in order to get anything going. And then you've got major resistance at it between $100 to $101 a barrel. So really not a heck of a lot to do there. Let's look at natural gas. So in last week's video, we were talking about natural gas, and we were talking about the fact that, we had broken this downtrend line, and I was fairly bullish on it, but where I'd really get interested on this market is if we broke above this swing point. Well, you can see we did that in spectacular fashion on Thursday. Thursday's a big news day for natural gas. I've had, a couple of traders in my live trading room here at Market Trading Concepts. They, over the, the past year have been, they've been fairly active in natural gas. And Thursday's usually the day they look at for the major news announcements. So it seems like Thursday kicked off, this kind of breakout of this swing point. And where I'm really interested in this market from a technical analysis perspective is the breakout here up to, this sort of range here. this sort of range here. So that's kind of where I was interested in it, because natural gas has been doing a lot of funny things in the past. But, I noted that, it looked like we had a potential low in here, a lower low. We broke this trend line, and I liked it more on the buy side than the sell side. I was more bullish than bearish. But this is really the area that I really like to see it get above for a retest of somewhere in here. That's kind of what I'm looking at for a retest somewhere in this zone. So I hope that makes sense. And let's jump over to another market. Let's look at let's see. We looked at crude oil, natural gas. Let's look at the gold futures. So the gold futures look like they put in a sort of complex bottom here. This is why I'm having a little bit of conflict on, do I think the U.S. dollar is going higher or lower? The euro's holding $1.30. The dollar index is at logical support on its pullback. So it'll be interesting to see if that holds. But if you look at like things that are usually inversely correlated to the dollar index, and I'm kind of the belief that the correlations come and go. But when I look at this, to me, this looks sort of like natural gas did, where you've had sort of a complex bottom being put in play, and you've got a low, and then you've got a minor higher low, but it's not going lower, right? It's not going lower, and then you get a pushback up. So the question will be, is this area going to be resistance, and it's going to come back down and test, the more major support down here, or is it, did it find a base of accumulation in here, and is it going to push higher? So, you could sort of sell this both ways. And I think where the rubber's really going to meet the road, let me just back up for a second. You can sell this both ways. Look at the MACD. The MACD looks net bullish now, or it's gone to the bullish side. Stochastics are starting to look bullish. The trending indicator is not bullish at this point in time. But I think where the rubber's really going to meet the road here is, you've got a sort of a couple of trend lines in play, right? Let's see here. Got this trend line in play, and then you've got this sort of more minor downtrend line in play, and it's not really that far off. And then you've got this kind of trend line in play, but it's not really as relevant. So we could get a push all the way into this trend line here and still be on a net sell side bias. So you've got logical resistance. In this area where these swing points are, where these highs are, right in around 1650, let's call it. You've got logical resistance there. You've got this downtrend line, these two downtrend lines sort of that are, sort of parallel to each other, but not quite. So, we could get a push all the way into here and find resistance there. So if we get above these key moving averages of, the 20-period moving average, let's call it, then I'm going to be looking for a test of this one of these trend lines above, and possibly 1650, which sort of falls right in the middle of the two. So, it's gold looks to me at this point like it's put in a sort of a complex bottom, but we'll really need to see. I mean, where the decision points, in my opinion, are a breakdown back above these lows at 15, let's call it 1554, and a break above, let's say, 1600. For a test of, somewhere around 1650. So those are sort of the decision points I'm looking at. Let's take a look at silver. So silver looks not as strong as gold, but it sort of looks the same in terms of a potential complex bottoming process. And I think the same logic applies. The same logic applies. You can, find some trend lines of potential resistance above. So just trying to think if there's any other markets that might be beneficial to cover. Let's look at the 30-year bond, and then I think let's wrap up this video. There's not that much to talk about this week. So the 30-year bond is really just kind of holding on to some of these levels. This level is obviously an important level now. So I'm going to mark it down here. I'm going to get rid of these fibs to kind of clean things up. So this level now, where we've sort of, when we broke this level, we thought that we were going to kick off, some trending action to the downside. But all we've really done is create a range of, you know, support resistance in here. So this level right around 140 and 25, 30 seconds, somewhere in around here, has become another sort of important resistance level in terms of, you know, this sort of consolidation. So a break of 140 in 25, 30 seconds, I think would make, you know, would really put me on the bullish side, or sorry, the bearish side of this market at this point in time. So that's all I really have this week. Hopefully I didn't, you know, exceed 20 minutes on this video, but I'll look forward to seeing you at an upcoming meeting. We're going to be having a meetup at the end of the month, the last Sunday of the month. I think we have 5 Sundays in this month, or I'm sorry, 5 weeks in this month. Let me just see, 1, 2, 3. No, that's not right. But we do have, so the meetup's going to be on the Sunday the 31st. We're going to have a meetup. And then next Saturday the 23rd, another quick reminder, you know, feel free to sign up for the educational event with Don Vialou in our live trading room. It's going to be a great seminar education session. So hope that helps. Good trading, and have a great rest of the weekend. We'll look forward to seeing you soon.